Are you ready to capitalize on taking advantage of large cap stock trading? The biggest thing we're going to do here is we're going to be breaking down the need to understand volume, range, and how float affects the stock's price movement. By the end of this video and these examples, we're going to be breaking down scanning for large caps, understanding the volume and how it affects the movement of the stock, and how to make sure that you're only trading the best volume per range movement so that you're taking advantage of only the best large cap stocks to trade. Hey there traders, Sean here, tuning in again with Neuro Street Trading Academy. And for the world's best education and strategies, make sure you hit that subscribe button. Don't forget to turn the notification bell on so each time we put out content like this, you can get results. Also, if you're enjoying the content, give me a double thumbs up so that way we know you're engaged with us. Now, before we go any further, I think it's equally most important to note that this type of video is critical, especially if you're looking to day trade and swing trade the stock market. The main reason is there's a big difference between small cap trading and large cap trading, and all of the professional traders that are taking advantage of large caps in our live trading rooms need to know this stuff, and which we're going to show you here in this video. So let's jump on the whiteboard and break down the topics at hand. First, we're going to break down large caps versus small cap stocks and why you need to know the difference, because they're a completely different ball game. The next we're going to do is we're going to talk about how float affects the movement of the stock, because the difference with small caps and large caps have a lot to do with volume per range, and you need to know why that's important. Then we're going to go into some key indicators that mainly large cap traders rely on, because it's much different than trading small cap equities. Then we're going to talk about our large cap scans. We've pre-built custom scans so that you can find the best trades for day trading and for swing trading. And then we're going to give you a checklist so that every time you get ready to trade, you have a step-by-step framework so that you can be approaching the markets like a professional. Now, we have tons of stuff and I'm super excited to share it with you. Let's jump onto the charts and get you into the material. All right, traders, welcome back. In this video, we're going to be breaking down Stocks Explained Part 6. And this is where we're going to start our discussions around large cap stocks. Up until now, we've talked about the foundation to the stock market. We've gone over buying and selling, the difference between fundamentals and technicals. We've looked at accounts, orders, execution, chart traders, dome traders. We've then gone into watch lists and scanning for small caps and for swing trades and for earnings and for sectors. But one of the things we want to talk about now is the difference between the small cap industry and the large cap industry. See, large caps are much bigger stocks, and it's important that you know the difference moving forward before you start trading them. So let's kind of talk a little bit about what a large cap stock is. When we look at comparing small caps versus large caps, we often see large caps come up in our large cap scanners come up when we set a minimum price to be greater than 2. Okay. And one of the things you need to understand is that when some of the same criteria that we're scanning for hits the scanners, we need to just determine, are we going to be scanning for large caps or small caps? And so this is really, really important to know the difference so that you understand the criteria that separates the different tiers of stocks. Okay. Large caps receive most of the spotlight due to the big banks and the players trading them and also having a larger stake in them. They're usually higher prices because they have much larger volume, they attract a lot of bigger players, and they move a lot slower with less daily range. And that's just due to the liquidity, it's due to the amount of movement, a lot of the participation in those stocks. Now, we break the market cap tier down by this. You've got micro caps, which are less than, greater than 300 million, but ultimately not too much, right? Or it should say less than. That's a typo on the arrow here. It should say less than 300 million, okay? And then you've got the small caps, which are 300 million to 2 billion. So we do a lot of small cap trading on our day trading scanners. You have mid-cap stocks, which are 2 billion to 10 billion, large caps, which are 10 billion to 200 billion, and then you've got mega caps, which are 200 billion plus, right? And here's the thing, right? Like it's not that large caps or small caps are better or worse than each other. It's the relationship to how we use them. It's the strategies that we want to be trading on these stocks relative to different environments. So we can trade a small cap strategy different than we would trade a large cap strategy. Or you might want to implement looking at maybe trading options on large caps due to the price restrictions, these types of things. So, it's just good to have this knowledge. A couple things you want to know the difference is that they're very different from small cap stocks. Larger caps will have less volatility depending on the scan criteria. Now, what we're going to do is I'm going to teach you a scan that's going to look for large cap stocks that move a lot more, which is really the stocks we want to be trading. Where if we're going to be trading a larger stock, we want to have movement in the stock. A lot of technical traders looking at larger cap stocks. It's heavily weighted on technicals, not just fundamentals, really on technicals, because there's a lot of traders looking at these stocks. More analytical, there's less emotional hype driven by the catalyst, so it's going to take some serious news to move a large cap stock, right? It has to do with big earnings reports, any type of major catalyst that's going to have to move that stock. More predictable. So when a pattern plays out, levels, larger players are interested in these due to the exposure. They are a lot more stable, bigger company profiles, a lot less risk due to the environments than, say, small caps have. And they're a lot more transparent because they're publicly available due to large interest, a lot of big players, banks and funds, etc. Also, large caps often pay dividends, right? So larger cap stocks often carry dividends due to their stability and the foothold in the world. And this not only attracts traders, but also income investors, right? So it's a little bit of a different crowd. And the liquidity, you're going to have higher volume, larger amounts of liquidity, which is attractive to both small and large account holders. So key focus for large caps, okay, is we want to be aware of the news, the earnings, the up and down ratings, mergers and acquisitions, and FDA approvals, these types of things. You want a high relative volume. High relative volume means the volume now is much greater than, say, the average volume. We want a lot more volatility. And we want the directional momentum and trends. We only want to basically be focusing on key levels of interest because it's really where these stocks are going to become in play. So you don't want to be focusing on just the large cap for the sake of looking at a large cap stock. There has to be a reason, okay? So a couple things. With large cap trading, you can day trade them, okay, if they have more range and volume. And you can also swing trade them, okay? And you can also trade options on them because they're higher price stocks and they have a lot of volume. There's a lot of participation. So a lot of traders will trade options on a large cap stock. If you are swing trading, you need to be ready to participate when your time is up, right? Since you're waiting more with these types of plays, you need the alert set. You want to have price triggers. You want to keep your eye on the game, so to speak, because when it's time to engage, it's time to engage. If you miss it, you can be waiting longer for the next play, okay? And this can be an asset as much as a shortfall, right? So you just need to know whether you're day trading or you're swing trading them. We have a lot more time to plan the trades and scan for better opportunities if you're swing trading. If you're day trading, you need to have high volume and range. Price needs to be within your risk profile, right? You can still trade a large cap stock and it can be lower priced, but you're going to have less stocks to trade on those environments, okay? And a lot of traders trade options on large caps due to the price, right? Like if you want to trade Apple or Google and such, like these are very expensive stocks. And so, a lot of traders with small accounts don't trade them, which attracts a more professional and more capitalized crowd. So a couple of things I like to talk about is large caps and float. How is it relevant to larger stocks? Float is the number of shares available to trade, like we've talked about in several other videos. Float relative to the ATR, okay, relates to the volatility of the stock. Lower float equals larger volatility and range. Higher float equals less volatility and range, okay? So many large caps have large floats due to the institutional ownership, right? 5 billion plus shares is a lot of shares. This means you need more relative volume to also move the stock. Many large caps have an upward of 70% institutional ownership. This means only 30% is traded by retail traders. So why do you think that's important? Well, because if you're going to be day trading, you want to have movement. And if you don't have movement, you don't have range. You don't have range, you can't make a profit. And it's going to take a lot more things to move a large cap stock. So what we're going to do, and I'm going to teach you this, is we're going to try to find large cap stocks that have adequate float, high relative range, high relative volume, so that we're only trading large caps that have movement and participation. And it's really nice because our scanners do all the work for us, right? So it's just good to know the fundamentals of what we're scanning for, so moving forward. Now, before we go into the scans, okay, what I want to do is I want to talk a little bit about some of the things that we look at with large caps because of the nature. Market correlation often plays a big role. We often want to leverage correlation the same way with large caps as we do with small caps. Preferably, we want to see strong markets, strong sectors, and strong large cap stocks, right? We still want to apply the same concepts that we've been discussing. We want to see weak market, weak sector, weak stock. We want to know where it is in the grand scheme of things, okay? And one of the indicators that we find is used by a lot of professional stock traders, especially large cap stocks, okay, is the tick indicator. So this is a tick market index, and basically it's a short-term measure of market strength. What this dollar tick indicator is, or market, so to speak, is a tick index. And it sums up all of the stocks in the industry upticking versus downticking. And it's used essentially for overbought and oversold conditions. So instead of using an oscillator, it's actually looking at it, it's more of a market breadth indicator. It's basically summing up all of the stocks that are moving up or down, and it separates the market into a grid, so to speak. So let me grab an example of this. Okay, I'm going to show you an example of this. This is the example on NinjaTrader. You can load it on several other platforms. You see it's uptick. It's the ticker is TICK. It's a tick index market. If we were to go in and we were to look at, say, some of the other markets, take a look here, instrument list. Give me a second here. 1 second here. Index. You see down here, it's a tick. So it's a tick index. So what it is, it's an index market that tracks all of the markets and all of the stocks. So what we do with this, okay, what I do with this is you can set this to a 30-minute chart. You can set this to a 5-minute chart, like if you're timing entries, right? If you're looking at timing entries. What this is, excuse me, is it's a gauge. It's an overbought and oversold gauge. And what we do with this, I'm going to grab a draw tool here so I can draw on the charts and show you, is I actually put these lines here myself. I drew them here. I put them here myself. And the reason for this is because when we're at the 0 line for this index, okay, anything above here is stocks upticking. So this is kind of like when a market's bullish, if the market is bullish, so to speak, right? Or if the market is bearish, so to speak. Anything in here is bulls. Anything down here is bears, okay? Because think about this. In order for the tick index to move down or up, it needs to have bullish or bearish sentiment. But you'll notice what happens when we start getting up into these extreme thresholds, okay? We start getting into these extreme thresholds, okay? What that means is this is completely overbought. And it's not based off of one instrument. It's not based off of, let's say, and this is extremely oversold. It's not based off of one market or a momentum oscillator like an RSI or a CCI or anything of the nature. This is oversold. It's based off all of the market stocks, like all of the stocks in the market, upticking and downticking in terms of buy-sell pressure. So when all of the market's up here, it's because all the stocks are buying pressure up, but eventually it gets to a threshold where it becomes extreme. And that's when you can see the market roll over as a whole. And remember, the market controls the sector. The sectors control the stock. Therefore, if the market is rolling over, it's going to drive the sectors and it's going to impact your stock. So this is really, really useful on large cap stocks especially. Small cap stocks sometimes will completely disregard this because of the fundamentals. But if you're trading a large cap stock, like if we start going into, let's say, the TC2000 scan, one of the things we've done is I built a scan. We're going to talk about that here in the next slide. But if I'm looking at all these stocks, like anything like a $230 stock, right? I need to know if the market's rolling over or not in order for that stock to potentially move, right? Because these are big stocks, right? If I could price these stocks up here, look at this Adobe. Adobe is a $400 stock, okay? So in order for this stock to move, we need the market to move or some major news announcement to move this stock. So that's why I think it's really relative that if you want to use an indicator that's going to help you gauge market strength for large cap trading, it's really good to use the tick index, okay? And it's really simple. You can set this up on many platforms. I haven't set it up on TC2000. I should do that. Probably do that moving forward for the classes. But I have set it up on Ninja. And if you want to set that up on TradeStation or the other equity platforms that we use, you can use it on TradingView as well, because it's all available. It's an index market. You can definitely do that. Okay. So what I want to do is I want to teach you a scan. We're going to use the FinViz scanners, also go into the TC2000 scans as well. We have these on the Trade Ideas platform, but we talk about the Trade Ideas platform more in our educational courses. So we're going to keep things simple for FinViz and TC2000 for this. So essentially, large cap scans can be used for day and swing trading. Normally, we're trading price over $30, right? You're going to be looking at a stock a little bit more expensive because of the nature of the market cap. We want average true range to be, large, right? So if the ATR is set to 2, or essentially 200 times larger than the average, 2 would be considered 200% larger than the normal ATR. This is going to be looking for large cap stocks that are really, really giving us large daily ranges. Because as I mentioned, it takes a lot more to move these stocks. So we want to make sure that they're heavily traded and moved by the banks and the other players. Now, float here, we can put float in here as a filter to pull in the large cap players. So what we're doing here is we're actually looking at float as the determining factor, because you're not going to have float of over several hundred million shares that are not a large cap stock, right? And so we want float over 200 million shares. Now, one of the things that I like to do is I like to look at volume, relative volume. This measures the volume relative to the historical volume. We don't have to worry about a large cap stock having volume. There's always going to be tons of volume on the stock. We want to see abnormal volume for these stocks because these stocks are very, very liquid. So we need to see that there's a serious amount of new participation coming in with a lot of range, because it's what we need in these types of environments, okay? And we use the same premise for stocks gapping up on the open for day trades. Since large trade caps don't gap as much, we would like to sort from percentage change to weakness, right? So let's go in here. Let's build a scan. Let's grab a browser. Let's type in FinViz. And let's go to the screener. Okay, now what we can do is I have a pre-built scan already for this. I believe I do. Large caps. Yeah, large cap day trading. See? So what I've done is I set the price down here to be above 30. You could change that. It could be 25. It could be 20, whatever you want. And then the average true range. See ATR? It's the measure of the stock's volatility. So over 2. Okay. And then you'll notice that I've got relative volume. Relative volume means it's over 1. Now, you could use relative volume greater than that, right? If you put relative volume over, 1.5, let's put over 1.5, see what that does here. Over 1.5. 16, shortens the list way down, right? That means these are seriously, seriously heavily traded. And this is, over 1 will give you, almost 3 times the amount of stocks, okay, for large caps, okay? And it's really a preference. And then float, you can have over 200 million. You could have over 500 million. See, if we put over 500 million, you see bring it down to 616, right? So it's just about understanding how restrictive you want to be on those stocks. Anything over 200 million is a large cap stock, okay? So now you've got a list here. And what you can do is you can sort through percentage change to find the strong movers and groovers. And you can see PDD, PDD is a stock. And if I go into the 3-minute chart or the 5-minute chart, this stock traded heavily up yesterday. Okay, this stock traded heavily up. If I go into the 3-minute, this stock gapped up off the open, pulled back, and then it traded heavily up. It was a very strong uptrending stock. So this is what we're doing is we're looking for stocks with large relative range. It's a $140 stock. So it traded off the open from 140 all the way up to 154. right? Well, a $10 move on this type of stock only yields about a 12% gain on the day, right? It's up $17, right? So here's the thing: a $10 move on a small cap stock is like several thousand% gain. So it's just about relative difference between the two different assets in their categories, but it's a really great place to start building a scan for large caps. And then what you can do, what's really nice is you can actually click down here and you can export these if you choose to. You can see it says export into a CSV file, and then you can just go to desktop and then name it, and then you can just export those stocks, and then there's all your stocks. You can import them into a watch list, or you can just type them in if you choose to into a watch list for trading. Okay, but one of the things that we did was we built the scans in TC2000 so that you have the actual watch list and the scans all at the same time, and then we can look at the charts together. So it's just a little bit more flexibility. And so if I come in here and I take a look at, I'm scanning all the U.S. stocks, I'm scanning all of the ETFs in the industry. I'm going to look here, I'm going to look at my scan criteria. So I got price over 30, average to range greater than 2 over the last 2 weeks. So I'm looking over the last 14 days. I want to see ATR, which is the study of the movement, okay, over that market, okay, and then ultimately latest float, okay. So you see latest float is greater than 200 million, okay. And then volume surge is over 100% of the average volume. Now you may get some different stocks in here. You may find different stocks in TC2000 sometimes with FinViz. It has a lot to do with their float scanners. And let's just double check. I'm going to pull it up on another scan here. 1 second. And SPG, yeah. So I did not have the PD. This stock here, I didn't have this top one, okay? I didn't have that top one, but I had SPG. Now there might be a reason for that. There might be a reason for that stock not hitting this scanner here. It might have to do with, let me see, price greater than 30. Let me just double check here, make sure. Price greater than 30, ATR over 2. It might have to do with the relative volume and the ATR settings being slightly different, because the way that the TC2000 looks at the ATR, it doesn't necessarily look at it over a 14-day period. You can change that. It's just the way that TC2000 runs their scanners. And then ultimately you've got the float. Sometimes float is a different, the way that the different websites pull their float data from different data providers, and the way that they calculate volume might be slightly different. But for the most part, you can see that this stock right here, SPG, was also on the this environment. So if we go in here to the 5-minute chart, there's the stock, and it's the exact same stock that we're pulling inside of the TC2000 scans. There it is. Boom, pulls back to the VWAP, gives the flag pattern, and off to the races, right? So it's just good to know that, you know, you have these added advantages to scan for those criteria, and that's really what we're doing here. We want to make sure that you have a method for scanning for the right stocks, because look, there's 53 stocks in this scan, okay, out of 7,000 stocks. You can go through this stock list here, and they're all optionable, right? You can see here we have all optionable stocks, and really what we're doing is we're looking for strong stocks. Look at these stocks. These all were strong players that day, right? The market was strong. The market had a reason to be bullish, and these are all big players, right? And sometimes this scan is very limited. Sometimes the market's not moving. The scans don't hit. Sometimes you don't see these scans don't fill till later in the day, depending on the market conditions. Sometimes it hits right out the gates. Has a lot to do with market conditions with the large cap scans, because they're large cap stocks. Okay, so a couple things I want to do to kind of conclude today's video on this, because large cap scanning is a little bit of a lesser coverage. We do cover large caps in our classrooms and in the other educational courses, but there's a little less to it, right? Large cap scanning is we're looking for the big players to be moving and grooving, and then we move to the strategies. So couple things here you want to do is you know, whenever we build a scan, we always ask ourselves these questions: is what is the scan for? Do I know the stock that I'm trading? Have I ever traded it before? What is the news on the stock that's driving it? Is there any news or catalyst? Like if we go back to that last stock here, it's one of the reasons why I like TC2000, is I can go to SPG, and I can click down here into this news category down here in the bottom right, and I can see that Goldman Sachs adjusts the price target for this company from 97 to 89. Okay, maintains buy rating. Okay, group two, oh, it moves it from 89 to 97. So this is a Goldman Sachs coverage. So this maintains a buy rating. So this is a buy rating stock. So basically everybody got in on this because everybody's, that's the herd mentality. Goldman Sachs says we're maintaining a buy hold on this. All the speculators jump into it, right? Well, I don't really care about that. I just want to know that it's driven for a reason, and then I get in the chart and play it. Where would we trade these stocks? I'll show you. We would look at the flag pattern here off the break right there. That's the flag pattern break. We would look at another flag pattern. This is another pullback break right here, breaking out on higher volume right here as well. You'll see that we had another pullback break here, and then this fizzled out. So this would be the A, B, C correction on the day break. This is the hold of the apex, and then they fizzled out into the close. But we would not normally trade those patterns in the afternoon because we're more interested in trading to the long side. As soon as this stock held above the VWAP in here and we got the first break off the open, that's the indication that this stock was trading to the upside. As soon as we break through to those patterns, right? But that's the concept, is we need to know why we would want to look at that stock. Well, it's got high relative volume, high relative range, and it's got the criteria met on our scanners. So is it a sector play, gap play, earnings play? This is important, right? One of the things I like to look at is what sector is it? It's in the real estate sector. And it just so happens to be that the real estate sector on Friday at the time of this was the strongest sector. So that's obviously something to be thinking about as well. When you're looking at participating in a large cap stock, check the sector real quick. You can simply go to our tab over here. One of the reasons why we built this, and just see, are you in a stronger sector? Really simple. Keeps things consistent, keeps things cleaner for your trades. And does it have a history of being a runner? So how do we know this? One of the things you're going to learn in our education class that we teach is we look at the daily chart. I'll give you an example of what that looks like. If we go in here and we take a look at this stock, SPG, I'm going to go down here to the daily. I want to know, do I have big range candles on the day? Take a look. Does this stock trade? Look at the range on this stock. This stock trades. Like you can see, the range on this stock has got lots of range. Yes, it's got smaller movements sometimes. That's consolidation. But when it moves, it moves. Look, that's the key thing. We can see, when traders move the stock, does it move? Absolutely. Okay, so these are things that we want to be aware of, things that we want to be paying attention to, so that we know that we're not just trading a dead duck, right? And so a couple things here is check the daily charts, check the 30 minutes, the 5 minute, and the 1 minute. That's for more of the strategy focus, and we're going to get into the strategy focuses when we're in the education classes. The other thing is, do you have good risk reward? Is the scenario going to meet the criteria of a good trade? So once you process this, okay, once you process this and you're moving past the checklist phase, now it's go time. Now you can add these stocks to your watch list. You can start participating in them, take the trade and it's appropriate, set alerts if it's a swing trade, right? And as I mentioned, these are primer videos to kind of get you familiar with what stocks are trading at and the scanners that we're going to be using and the primers and just all of that different stuff, because as you know, when you learn the basics, then it's time to move to the education and the strategies. And it's really hard to teach a trader to teach trading strategies when they don't understand the stocks at all, right? Welcome back, traders. I know you're super pumped to learn the material we just covered in the large cap video, but this is not the only video in the series. If you like what you learned, down below this video, there's a whole bunch of other links to all the other videos in the series. Make sure you check them out. Now, last but not least, make sure you hit that subscribe button and be sure to share this video with your friends, because I'm sure they're going to benefit just like you. And don't forget to ask a question and leave a comment below so that we can engage with you moving forward. Take care, traders. We'll see you in the next video.